All right, welcome back to the Ask Maddie Show, edition 2 here. We got a second edition here, Maddie. How are you doing?
I'm doing all right. I'm excited to answer some questions and talk about crypto.
Before we get into that, though, we need people to become a Crypto Charge member. So make sure click the link in the pinned comment below. You can become a Crypto Charge member. 2-week free trial, super easy. You're going to want to do that because next week we're going to be doing a Discord only event. We're going to bring a few of the Discord members in to have a conversation and ask Maddie questions. So that should be super entertaining. So 2-week free trial, pinned comment below. Today's show, we're doing a little bit of a different edition here. It's just going to be me and Maddie, and we're pulling up questions that you guys left on TikTok, YouTube, Instagram, some hot takes, comments, and questions. Maddie, we typically do this on TikTok just between me and you, and it's pretty entertaining when me and you see these kinds of comments, hot takes, reactions. What are your general thoughts when we're reading like some of these TikToks by people that are leaving comments?
It's tough, right? Because I know that TikTok is pushing our content out to people who aren't natively familiar with the concepts that we talk about. And, they are also, comments that aren't coming from people who spend upwards of 50 hours a week doing this type of research that's crypto specific and, essentially becoming an expert in this industry. So sometimes it can be a bit of a topic, both from like a financial standpoint and a crypto standpoint, where there's just a huge misunderstanding of, where that knowledge base actually comes from. So, sometimes when we're dissecting the comments, it's difficult to come to a rational conclusion of, why somebody would actually ask that. But, we try to answer as many questions as humanly possible and try to turn that into education and, not look down on anybody.
Definitely. So I grabbed some comments off of all of our platforms. Again, we do this on TikTok every single week. Now we're going to be doing it for you live. So let's hop into the first one here. Wow. Well, Mr. 00702 says, these usernames, Maddie. Wow. Welcome to the corruption. How in the hell is there such corruption in crypto? So much for it being decentralized. But ever since we started having to pay taxes on it, made crypto not decentralized.
So I think that this is a very common topic that people try to tie to crypto in general, as if there's any sense of centralization, even if it's a partnership, whether it's a partnership with a bank or an institution, everyone says, well, now that asset's centralized and it's no longer decentralized, or there's concepts that revolve around crypto that are centralized and that somehow takes away from the decentralized nature of it. I don't believe that, right? Because if we look at the existing monetary system, we think about the way that banks have operated for years, that fiat has operated for years. You're not going to have all of these big conglomerates and entities and regulatory forces just give up all of that control. So the reality is we need to find a blend moving forward of the legacy system that we have now and this new wave of crypto, and they have to fit together. And as much as we want to be purist and say that everything should be decentralized and decentralized peer-to-peer transactions, there might be certain assets and certain coins that are going to be really good at that. Maybe like, the Zcashes and the Moneros and maybe even the Bitcoins, right? But the reality is the majority of these assets will have some sort of oversight. And that's just the only way that we can see, 30, 40, $50 trillion market cap for crypto moving forward.
I like that. You said a blend, and it's literally like an integration. It's not all the way one way. We're not all crypto moon boys tomorrow or the other way. Hey, Maddie, can you throw on your headphones? I know I'm talking now. I know we're already starting. But it's not like this flip the switch, Matt, right?
Right. I think that flip the switch in general is kind of a goofy thing to think in general, because, this kind of adoption doesn't happen overnight. It can happen very, very quickly. Like when we look at the internet's a very big example that people consider when they're talking about cryptocurrency. They talk about how quickly we've adopted compared to, cryptocurrency as a whole compared to the internet growth. But even then, right, we've always had these obstacles and hurdles and have to work with regulatory bodies at some point in order for the internet to become what it is today, right? Like there's certain things that we need regulation for, right? We don't want to see child pornography all over the internet. So you need regulatory bodies to step in to provide that regulation so that we can still have access to this incredible tool, the internet, but we're still keeping people safe, right? So I think that we need to approach crypto through that same lens of there needs to be sensible regulation, but not restrictive regulation.
I don't know how anyone could disagree with that. All right, let's move on. Annan, oh man, except you shill non-institutional grade assets. Remember API 3? Zero real enterprise use. It's all link. You're two-faced. Like you see comments like this, Matt. We see these all the time, and people just don't understand like how you have to approach some of these comments, because we see comments like this. We see a lot of positive comments, but we do see comments like this.
Right. And, I think that a lot of that comes to maximalism and also kind of just closing your eyes to other opportunities in the space. I have actually nothing bad to say about Chainlink whatsoever. It's a fantastic asset. They have lots of partnerships. But at the end of the day, it's just an oracle. There's not going to necessarily just be one winner of every segment, right? Just like XRP is not necessarily going to be the end all be all of payments. I think that there's room for the Algorands and for the Quants and for other assets that are highly efficient at payments, even HBAR, right? To have a space in this, and it's not necessarily this end all be all. Why is there a Visa and a MasterCard? Why is there a Discover and an Amex, right? They all facilitate the exact type of transaction, right? They give you the same abilities, but people still like to have choices. People still like to have certain benefits that are associated with certain cards, certain providers, right? So when we look at API 3, it's a young buck, right? People aren't that excited about it because they haven't been introduced to it in the same way that they've been introduced to Chainlink, but that doesn't mean that API 3 can't be quote unquote institutional grade in the future. And that's kind of a term that I've never actually even heard before, institutional grade crypto, right? Because anything can be institutional grade crypto if institutions decide to adopt it, right? And API 3 does a lot of the same things that Chainlink does. It just uses offline storage. So you get higher throughput, more transactions per second. But just like a lot of young assets, even when XRP was a fraction of a penny, when it first launched, nobody knew what XRP was, right? You fast forward 5-6 years, you've got this huge giant community who knows about XRP and can't get any more passionate about that. So, I think it's crazy to dismiss young assets just because they don't have the same household name as something like Chainlink.
Yeah, I don't want to sound like I'm too agreeable here, but like I've learned from you, Matt. And so when we talk about API 3, it's a young asset. So there's nothing else to see from there. That's where you're going to make the majority of your money. That's where I'm invested in. That's where, me and you are both looking to make a lot of money in API 3 in the bull run. Any more comments about API 3? I just think this is hilarious. This happened.
I would definitely just look into it if you guys have not checked out API 3. It's a fantastic asset. You guys can also earn really crazy rewards right now. It's upwards of 30% APY in the direct staking pool. Those rewards do take about a year to unlock, but if you start staking them now, there's a good chance in the next bull run you'll be able to redeem those rewards and sell them for a profit.
Great insight. Brave Sigma 82. This one will be a front runner. I believe he's talking about Casper. I'm thinking at least 50 to 75 cents, maybe even $1. My predictions are low because of the inflation issue. Oh, Matt, I know you're going to have comments about that. Market cap today is almost the same as the launch, but price is a lot lower. I think the inflation is under control now, but it will take a lot to get over $1. It sucks, but 2-3 cents range has been a great place to accumulate. Matt, what are your thoughts on this? He's talking about Casper here, definitely.
Definitely talking about Casper, something I'm very bullish on from a fundamental standpoint. If you guys haven't read some of those really great threads, seen a lot of the interviews that they've done with their CTO, talking about everything they're doing with Casper, whether it be the upgradable smart contracts, the native NFTs that live on the Casper network, predictable gas fees, and also just being geared specifically for enterprise, right? So if we're going to go back to that comment about institutional grade, I would say that Casper probably is institutional grade if we're going to be specific about it. But we're talking about price, right? And people like to talk about market cap and circulating supply. Almost all of Casper is now in the circulating supply. Most of those unlocks have already happened, meaning that we've already seen most of that initial pressure alleviated. Moreover, when you look at the total value locked, meaning the staking of Casper, it's at an all-time high and continues to climb. And again, you guys can earn about 11% on Casper using Casper.live right now. So when we look at that aspect of it, I would say the majority of the pain is done. We did a video talking about other assets that look just like Casper, where we have this initial launch at this crazy high price, multiple depreciations, multiple new lows that get set, extensive accumulation that can range upwards of 600 to 1,000 days, and then astronomical new highs, sometimes even filling the previous initial launch price. So right now, I'm still aggressively accumulating Casper 2, 3, 4, even under 5 cents. Really, for me, is still a fantastic place. And I think a lot of those targets are great short-term targets between 50 cents and $1. It's perfectly reasonable. We even talked about targets upwards of $4 or $5 if we see a true parabola set in, maybe listings on some bigger exchanges like Coinbase and Binance US, right? That would really bring in a lot more investors into the pool. But I think that a lot of people look at price in the short term in the bear market. It's easy to be pessimistic about an asset that you don't know about. Or you don't have faith in, right? Because those prices don't seem optimistic. But once we're in the bull market, we're seeing multi-100% gains over a small week or small period, like a few weeks. Everyone becomes very bullish, and those fundamentals just seem crystal clear to everybody. So, if you want to make a lot of money in the bull market, spend your time and focus in the bear market and accumulate assets that look like this, that look like Casper, and that's really what's going to send you on your way.
Great. Can't say anything more. C Blanche 35. So You can complain all you want about it, but it won't end well for XRP. Should never touch something in a government lawsuit and consistently bash. They clearly don't want it to succeed.
All right. So a lot to unpack here, right? And it's kind of hard to unpack, first of all, 10 years of XRP history. First of all, being a high quality asset with zero downtime. But also, again, talking about the here and now, prices being suppressed, looking at the macro headwinds of the SEC really just hammering down, not just on XRP, right, but also the entire crypto industry, right? Exchanges, stablecoins, they're going after everything. So if we're going to take that mindset of, what's this government involved in? If you're going to say that if they're attacking stablecoins, which is kind of the heart of the crypto ecosystem, that all of crypto by that nature should be something that we don't touch and something that won't succeed, right? So that's kind of like a very narrow-minded way to approach it altogether. But moreover, specifically when you look at the SEC v. Ripple case, Chris Larson and Brad Garlinghouse had the opportunity when this all started to settle separately, put all of this behind them and move forward. But they said, no, we didn't do anything wrong. We know we didn't. And they have the money to defend themselves, right? They're sitting on $1 billion in cash. Ripple is right now. And the reason they've dragged this out so long and they've fought everything tooth and nail is because they have a rock solid case. Whether we're talking about the fair notice defense, whether we're talking about the Hinman emails that show that the SEC was complicit and intentionally misguiding the public about what a security is, what a non-security is, what's sufficiently decentralized, right? They know that there's a lot of gray area in there, but they also know that there's hard evidence that they can extrapolate from the SEC to show that they intentionally misguided the public about crypto guidance as a whole, right? Gary Gensler likes to come out here and say that there's plenty of clarity, but the reality is there isn't. We still to this day don't have a form that we can fill out top to bottom and say, this is how you launch a public blockchain without being sued for selling unregistered securities. So again, this kind of comes back to what I was commenting on earlier. When you have assets that are in these lower prices, that are going through it, that are maybe having some struggles, it's super easy to dismiss them and say they're going to zero, they're not going to do well, might as well give up on this asset. But most assets that are worth it, you have to go through it, right?
Beautiful. That was kind of a loaded question now that I look at it, definitely.
A bit.
I kind of see what you were going to pick apart there, but yeah. The real Steezo. What stablecoin are you going to sell your XRP into?
So right now, the plan is to sell into USDC. I just really love everything that Circle's doing. They have so many huge partners backing them, including BlackRock, one of the largest asset managers in all of America. They still plan on going public at some point in the near future. I'm sure they're still waiting for some of this regulatory headwind to pass, just like we were talking about in the previous question, right? There's still some uncertainty out there, but they're actually bolstering their staff. They're looking to add about 25% new staff right now, which is something that most companies are not doing in this bear market, and are still harping on the fact that they want to go public at some time at the end of this year, at the top of next year. So I feel confident at this time going into USDC. I have no fears about Tether at this time, but I just have a little bit more confidence in USDC at the moment.
Nice. Howard Dennison? You are assuming the crypto space is going to be the same when regulations come out. When regulations come into play, the surviving cryptos will be less volatile. Telling your average person to buy and sell the dip is irresponsible and is going to get people wrecked. As for staking, it depends on the availability of XRP. XRP is not meant for retail investors and probably will be available to your average citizen for future staking is a possibility.
Okay. So there's a lot to unpack here for sure. So for me personally, I've been studying charts and markets going on about 8 years now. And actually, I didn't start in crypto. A lot of my basis of education came from foreign exchange. So, I understand how much money is moved around the world every day. I pay very close attention to who holds that money, right? Where that money is actually made. And then that, really spilled into crypto later on. So I do view crypto from two lenses. One, from this revolutionary technology, whether we're talking about blockchain or distributed ledger technology that can disrupt many industries, not just as an investment vehicle, but whether we're talking about payments or logistics or NFTs, right? Tokenizing physical and non-physical items, smart contracts. There's so many elements to cryptocurrency that weren't really so prevalent in 2013, 2014, 2015, right? But regardless of these new advancements, regardless of how many new things we add, whether it's metaverse or whatever else, AI tokens now, the markets are still behaving in the same way that the markets behaved when the markets were still young, when they were still 2015, 2016, 2017, right? We're still seeing the same aggressive volatile corrections. We're still seeing the same aggressive parabolic pumps when those macroeconomic conditions align, right? So when we look at crypto has followed the stock market since its inception, because Bitcoin's a little over 11, 12, 13 years old. So, you have Bitcoin following the stock market. It always has. So a lot of altcoins have kept up the same way, albeit there's a little bit of a lag cycle-wise within crypto. Most of the time, right, you have like this 80, 90, 95% correlation between crypto and the stock market, which means it's a risk-on asset. We look at, even other parts of the stock market, right? If you look at the tech industry specifically, it's always going to act more volatilely than the rest of the stock market, right? Your Dow Jones is not going to act the same way as your FANG stocks. But, if you want that exposure, if you're willing to sit through some more drawdown, you're willing to sit through that volatility, you're going to invest more heavily into tech stocks, especially if your risk appetite allows for it. So, I think that a lot of people look at crypto as this big esoteric thing that's so different from other investment classes. And it is a lot different, right? It's brand new technology. And we're buying tokens, which aren't necessarily shares in the stock. And that definitely differentiates big time. But there hasn't been an example yet so far in history, and this could change over time, where we have crypto acting all on its own, rampaging in a bull market, while the stock market is absolutely collapsing all on itself, right? So if we see that decoupling, that will be something that we have to look forward to, but we always have to look at what has price done historically, and then that's how we project what price will do in the future. So could regulation come in and potentially make it less volatile? Yeah, potentially, but assets are worth what people think they're worth. That's what fair market value is all about. That's why we have derivatives. That's why we have leverage trading. That's why we have so many different exchanges, right? There has to be a sense of fair market value. So this was definitely a multi-part question here, but I don't think crypto's volatility is going to cease anytime in the next 20 or 30 years.
Yeah, that was a good part to attack. I just find this a little bit weird. Telling your average person to buy and sell the dip. I guarantee you Matt tells nobody to sell the dip. Is irresponsible. Is irresponsible. Well, it's not irresponsible if you're a member at cryptocharge.com. That's all I got to say. Gen X Super Duper. What is a good exit strategy when XRP rises a lot? Matt, you can get in like your whole breakdown, or just share a couple tips.
Sure. So no matter what asset you're investing in, whether we're talking about XRP or if you're into other coins, Bitcoin, H bars, your Casper, it doesn't matter what you're into. You want to, even before you enter, have some sort of exit plan for yourself. And you want to talk to yourself in percentages or tranches, right? So if you have, let's say 100,000 XRP, and you know that you want to hold some of that long term because you believe in that project over 5 to 10 years and not just for this next, 1 to 3 year period, you want to decide mentally how much you want to keep for yourself, right? For me, that number is between 20 and 30%, especially when you're buying assets that are severely undervalued and you may never see those prices again. It's a good idea to consider keeping a portion of that long term and let that ride out as a long-term investment, right? Additionally, if you keep those for over a year, you qualify for long-term capital gains, which is a much lower rate of taxation. Out of the rest of it, though, and this is where not everybody agrees, right? And this is kind of part of the last question of buying and selling the dip, right? When you're looking at crypto and it's very, very volatile, we know that you can see, 20, 50, 100Xs and sometimes more in crypto. But what happens in the bear market? Almost always, you see 80 to 95% depreciation on those assets. So if you're able to use something like Fibonacci's extensions, which is my prime tool for charting targets, and it's not just me, right? It's a beautiful sequence found all in nature. Lots and lots of traders around the world use Fibonacci's for both day trading as well as long-term trading. When you can pick out targets and you know that you can take chips off the table and provide yourself a profit, pay yourself back, I'm going to take those opportunities to do that, right? I'm going to make sure I'm taking 20 to 30% at 3 to 4 different targets so that I'm, putting myself in a position so when the market does crash to be able to buy back in lower. So I think people think when talking about XRP specifically, it's this big esoteric asset that, is going to change the world and revolutionize payments. Why would you sell it at, $8, $13, $21? Well, the reality is because I know markets move in cycles, right? Does XRP reach $100 or more in the future? Sure, but it's not going to happen all at once. So might as well capitalize on some of these market swings, the volatility, buy in at higher lows, even if I'm buying XRP back at $3 or $4, to be able to sell it again at that $50 or $100 mark, right? And then still keeping that portion of the bag long term. Crypto is not an all-in or all out thing. And a lot of people make that mistake. They want to wait with all their dry powder to buy the bottom, or they want to hold everything because they don't want to miss that huge parabolic blow off top. But the reality is, if you keep some of it long term and then you're tactical with swing trading or position trading and selling, 60 to 70% of your bag at certain targets that you have predetermined ahead of time, that's what's really going to make you successful in an emerging asset class like this, because it won't last forever, the massive pumps, but we can capitalize them while the market's still young now.
I love it, Maddie. I mean, this goes back to your consistent investor strategy, and it's on point, and that's all you. And I like how you're not a maxi and not a pessimist. You fall in the middle. You're not overly bullish or you're not underly bearish. I think that's what keeps you sets you apart from other people. No comment. All right. Last one, good, genuine channel. I just felt like we should end off on something positive here, because a lot of these can be negative, Maddie. I mean, we could probably next week find some even more negative comments, but we had to bring them in easy today.
Oh, I appreciate that, guys. And I know there is a lot to pick from out there, right? There's so much information coming at you guys 24/7. And, that's kind of the benefit and the downfall of Twitter, is that there's so much information out there and it's easy to get flooded up in it. And I do think that you should take a faceted approach to your investing, right? You don't want to just look at the charts. You don't want to just look at the macro. You don't want to just look at the fundamentals. You kind of want to take a blended approach of all of it and try to make a reasonable approach to all of it, right? One tip I want to leave you guys with is that no matter what assets you're believing in, or you're looking at, right? If you have a really big target for an asset, whether it's Bitcoin or XRP or Ethereum, take your worst case scenario for that asset and accumulate in this bear market as if that's the only target that's going to be hit. That way you're not disappointed or setting yourself up for a situation where if it falls short of your maximum target that you're disappointed or you're not going to strive for your goals. Stack as if the lowest target is the only target that's going to get hit and everything beyond that is a gift.
Words of wisdom. We're definitely done here. Matt, we'll get him next week. All right. Bye, guys.
Cheers.